It's worth stressing that all tax indemnity inquiries received will be subject to a risk assessment by insurance underwriters, which involves a team within Abitax with specialist tax knowledge. Not all inquiries will result in a risk being underwritten. Certain risks, such as tax avoidance schemes, are not able to be covered by tax indemnity insurance. Long-term IHT planning is again an area unlikely to be successfully covered by the insurance. Initially, inquiries are dealt with by phone and email to establish the outline details of the risk. Once the key documentation has been reviewed, insurers will be able to decide whether a non-binding indication of cover can be issued. This is an insurance term which effectively says we will be able to offer insurance for this tax risk, for this premium, and in most cases subject to confirmation of certain points and or sight of certain documents. If too much documentation or fact was missing from a proposal, it is unlikely a non-binding indication of cover would be issued, not least until a clearer picture is established. The premium for tax indemnities insurance is based on a rate online, ranging from 3 to 12%, with the industry average around 7 to 8%. All premiums will be subject to the current insurance premium tax. Based on the type and nature of risk involved, excesses may feature in premium quotes. Underwriters may decide in cases of uncertainty that an excess is appropriate, or alternatively, an excess may be introduced to reduce the rate online. Tax indemnity policies are invariably one-off premiums for a defined period of insurance. For example, HMRC assessment time limits or claims periods may be relevant to the liability. An example might be 4 or 6 years based on HMRC's ability to raise assessments. It's very unlikely that a policy could be issued which potentially involves assessments being made within the 20 years permitted in cases of fraud. It is a condition of our policy that a defence is made to any HMRC challenge affecting items covered in a policy. So in practical terms, the existence of a policy cannot justify agreement to HMRC's position at the first sign of an inquiry. So, any potential insured entity will need to consider whether they have funds to defend a challenge by HMRC. We can and do offer legal expenses insurance as part of our premium, which, in the event of an HMRC challenge, can fund the defence of dealing with an inquiry. So, where might tax indemnity insurance help? In a situation where an advisor has been unable to get HMRC clearance because, for example, HMRC do not consider they're able to offer comment or confirmation of their position, or tax planning where clients have concerns where advice is qualified, for example, incorporating a property business, or divorce cases or commercial disputes where assets are being split can often highlight uncertainty in tax treatment. Status concerns. This might be for agencies, contractors, or any business involved in a labour chain. If advisors have any specific cases involving tax issues, we may be able to help. In the first instance, simply send us a brief outline of the case and we'll happily give guidance as to whether it's likely to be a case we will consider to insure.